Sebastian here, just going to do another video showing you how to turn any market cycle into flat overall gains. You would have seen on this hedging series, I've done this over and over and over again. I know before I start this video, be the same. So we're going to jump into that. Don't forget as well, we're now closing out 2024 with our members, going to start live soon. Don't forget, if you're someone who really wants to make it, you're serious about making money trading, then go underneath this video and join us through into 2025, work with us the whole year, and we will get you where you want to be. Let's get into it. Hey guys, welcome again. I'm just going to do this one on gold. I've done Forex pairs only, to be honest, and really to widen the portfolio. It's handy to have metals, indices, perhaps oil in there. There's just a few things I would know in very basic terms. Of course, if you want to learn really how to manage a full diverse portfolio and handle it well, then you're going to have to go underneath where we teach live on Zoom every day, and you can get our full method. But in basic layman's terms, if you're trading things that can really, go against you and with differing pip values, you're going to want to change your size because the losses, obviously, or the drawdown can really rack up. Now, we'll pause it at this point so I can discuss that. Instead of having, let's say, 0.1 as a max size on a Forex pair, I might consider maybe 0.05 at a push, 0.04 as a max. Like I said, if this pulls against me and my sizes are too high and I don't space out entries, I can't cover the broad variance of the market. Now, if you're going to be hedging, you've got to understand within the asset you're trading both how far it can run, okay, and what the pip value is going to be, how much you're going to be losing over time or what you're going to be in drawdown so that you can protect. You can also allocate a larger amount of drawdown to that particular asset. So just to kick things off, because I'm not sure exactly where we are in the market stage. I know we're rolling out through 2014. So you can see a move there that isn't too great. Not causing too much of a growth in profit. So I'm just going to let things run. And you can see I'm now down about $8 or so on that move. So I'm going to add again. Okay. And you can see minimal gains there, but there is rejection. So I'm going to remove it. Now, I don't need to hedge or anything like that just yet because I don't really have any significant drawdown. I'm just going to escape that and pretty much start from a blank canvas. If it dips, I can get long. Okay, probably could have taken a few of those, but I'm now going to add short as we're coming into some key resistance. A little bit of a drop, not an awful lot. A bit of rejection on the downside. I can add an early long perhaps. Okay, kill that off. It's very weak. Add short. Now again, as I say on many videos, yes, these aren't huge gains at a time, but you can take a lot of entries and it really caters for that. So now I'm going to add another short, and if you get any higher, I'll just add short again. Okay. So I like it again there. So I've now got 0.03 over a space of about $12. So really, if I'm going to add any more, I want to let things run a bit. Okay. So we've got a decent move there, and I can kill two of these off. I can almost immediately hedge long this. And to run this quicker, I'm going to put it on the 4 hour. There we go. Big pop up. Nice gain there. And now I'm going to add another micro. And I can look to hedge this because the price looks supported to the downside. So any pullback really to something like this, and I'm willing to hedge, I can add another short just now as well. Okay, so that would have been ideal. Maybe for a light hedge. I'm going to kill this off because the market looks reactive to the upside. So now, this hedge long is half of the exposure on the former two. So any pushback to the highs, I've got the insurance that, I'll be able to close some gains to mitigate that. If it does fall lower, of course, then I'm going to go into gains on my shorts, which is going to help me extinguish that. So we actually push to the highs. So I've added again and I've exited that hedge. Now, because of the fact that I've added 3/5 of a max size over $30, I can let things slide a bit. And it's likely I'm going to get into some hedging opportunities soon. Okay, so I will close that. I'm going to add a light hedge again, 50% of the former. Overall exposure, I'm again out of that. Not too keen to add just yet. I want to let things stretch. Okay, so anything above this high, and I probably will just add another short. Okay, so this is great. Hedge territory, nice pullback, reasonable distance off the highs, $14 or so. So again, essentially, if you get a pop, I can use some of that. If it goes higher like that, I can use that. You look at this, $14.50. We're only sort of $7 off that sort of max drawdown for that asset, or the loss sitting on that asset. So I can add short again on rejection, miss the entry, to be honest, somewhat. Any wilder pullback, and I'll just, to be honest, price looks supported, so I'm going to kill it. I don't want to hedge just yet unless I get something more vicious. I will just buy this because price again looks supported, not really pulling very much. And I know if it does, I can just add to the long side. So still price very supported there. Kill that for gains. And again, this is it's more than a fifth of this original drawdown. So now we've gone $40 up. I don't really need to reduce. My equity drawdown is still positive. So I could even just add in case we fall. And then if we keep rising, I can be more cautious and I can hedge as and when. So I probably need a larger pullback to hedge anything. Okay, so that'll do. I'm out of that and I'm hedged long, just very lightly. I don't need to go crazy buying. You can see there's obviously a sustained uptrend now. Now this is decent. I can take a 0.0. I will just take another one just to be a bit more risk averse because we don't have that much historic price data. Okay, so now you can see market struggling. So I've got the opportunity to take off this loss. Okay, if it does return to the highs, it's not a problem because that hasn't really caused anything for my equity, and I can just hedge lower to potentially regain that on some hypier move, if you like. Now it looks like price is still subdued. I can still add again there. Okay, so now I've got a larger fall over a distance. I can probably take a max at this point, but I don't want anything else. Close that short. Okay, any pop up and I close the long. Okay, so I'm just going to get rid of this. So at this point, equity drawdown is still positive. Obviously, any lower and it won't be. Okay, so real push down now, $174. So we're 110 in minus at the moment. So at this point, I'm still happy to add again. And I could add 2/5 of a maximum size, and I'm looking really for a decent pop back to early resistance, probably around 11.82. I can exit along, I can hedge short. At this point, drawdown is rising, yes. However, it's not a big deal, it's not a big threat. So subdued market there, no real sentiment case for it to the upside. Now picking up, a reasonable amount of drawdown. So I'm probably going to just slow down any longs and I'm just going to look to hedge and protect. Again, if I want to hedge, I want something decent. Back to 11.61 for me, most likely. Okay, so this is very good. I've got the choice how much I hedge. I'm going to take 2/5. And what I'm also going to do is I'm going to remove that local long. Okay. So if the market does go lower, I can take hedge gains like that, and that recovers what I lost. I don't really want to add because the setup is not particularly ideal, but I will add short on a pop-up because I'm protecting more than I'm adding, because I know, I don't want to end up with a massive drawdown cycle to deal with. Again, market subdued, so any push lower. Now here's where I will add, if I can push a bit under. Ideally, I would have taken several trades at this point, but it's a bit too fast, to be honest. This might be okay. So $5 there. Yes, I know, not a lot. I will only add light because the market is indecisive, pretty much. Take that for gains. Dip back, still a bit of momentum there, so I will add again, lightly. Nice pop there. You could see that being fairly likely on that momentum. Short again. Now you can see my balance is rising. Equity is now coming back to neutral. Any pullback that is sustained to local support. Okay, so we're not seeing too much there. But you can see price still supported, so I'm going to take a 1. Okay, so I'm out of that. Add short on 1. The reason why it's light is because of the momentum. Again, quite supported price to the downside, so I'll kill it early. And I don't want to add really long because we're quite close to those. I would have had that short. Maybe I'll slow it down. We're quite close to those former longs, so I don't want to go crazy. Again, price supported. Don't want to add because we're not far off former entries. I will add short again. I'll do it slightly larger because price is fairly sustained. I can get a decent amount of that exposure formally hedged. Okay, so price still supported, and any push to the high, I can kill longs, add short. Okay. So really at this point, we're just waiting for a move either way. But you can see the equity drawdown now in neutral. We never got near, our sort of 1 to 1.5% target on gold. Put the drawdown threshold up a bit because of the nature of the asset. We're going to need more room. That would have been decent to exit. The problem really, you have to note as well, I could have said many hedge longs. And I could have added short every single time as well, which typically I would have done, but it's just too fast to sort of pause it, if you like. So I'm going to add one more here just because I'm in positive, almost positive equity drawdown anyway. Not seeing much there, so I'm going to hedge short, take a light hedge on these former entries, just in case we pop down. Okay, again, too slow. Would have been nice to take. I will add again, trading a bit more aggressively. Like I said, now I've taken gains. So here we go. Bigger drawdown drop. I don't want to add because there's extreme weakness there. And to be honest, I'd be more interested in hedge shorts like that, just to protect. Another one there. Okay, very, very wild market now. I've already got 2 shorts in play here. Probably won't add unless you do something like this. Absolutely. Excellent. So now I've got a bit of distance between these 2 shorts, but I'm happy to add. There you go. Kill it for gains. Add again, perhaps lightly. In fact, no, I won't. I'm not going to add. I'm going to give myself a bit of breathing space if I can. There we go. Excellent. I'm going to add a light long. And you can see again, we're now, the exposure essentially is almost matched. So the drawdown won't rally a lot, but we are in positive equity drawdown again. Okay, so I'll kill that for gains. I can add 1 light short there because price isn't as high as before where I added 2. And any push beyond those highs will allow me to kill those longs. Any subdued, again, you could have made many minuscule hedges doing, trading this sideways, more or less. Price is still somewhat supported though, so I'm not going to hold too much short. I will add a long there. And anything lower, I can look to get out of those shorts. Anything higher, I can obviously kill for gains, like that. Excellent. Out again. Light short added. Don't want to restart this. That would be a disaster. Of course. Not much going on there. Could add again, perhaps slightly. Okay, great. So I can kill that. I can leave that one on just to hedge some of the former exposure in case we push to highs. Okay, now I'll kill it. Where are we? There we go. So now I'm still in positive equity drawdown. So I'm going to add, I've got 3 there. That'll make it 4 over a market swing essentially of almost $100. So That's quite decent. That's more or less what I'm looking for. Kill that one off, gains. Do I want to take a light hedge long? Yes, because of the support here. It's a tiny bit early, to be honest. Okay, I will kill it because you've got no reaction. Any real push lower down here, and I'm hedge, long. There we go. So that might get triggered. Suppose I should probably be using orders. It might help. There we go. So it didn't take my long for some reason. Maybe a setting or so. I never use limits really on here. Okay, so pulling back, price still supported. Got a little bit of gains there. I can also add short because price is also a little bit sticky. And now I'm really accumulating a decent amount of gains while sustaining equity drawdown. My drawdown never really gets anything dangerous because I'm always hedging part of my exposure or all of my exposure. And that's the point really with hedging. You get the chance to control, if you like, how at risk you are, because I've just taken a 0.01, I've got 3 in play. So really the net is only 0.02 effectively. Now I know price is now uptrending and it's support is sustaining it. So I can let things move a bit and breathe a bit. Anything under that, excellent hedge gains there. And now I've got a choice. I could effectively just do this and I'm in overall net gains. Okay, and of course now I can add again to look to just continue. So basically, because I've traded both sides of the market the whole way, I haven't been sitting there taking losses. Okay, I've allowed myself to not only sustain my equity and continue, basically have a minuscule drawdown overall. Okay, but I'm also in profit. All right, so I'm not just making money willy-nilly. I'm also making profits while maintaining very minuscule drawdown. And that is essential if you're someone who wants to beat, for example, a prop firm challenge, or someone who just wants to be safely profitable. You're not wild about becoming a millionaire overnight, but you wouldn't mind sort of trading without anxiety. And when you're sort of using, hedging methods, you've always got the chance to somewhat control your drawdown. And that gives a lot of peace of mind. So I can kill that as well. And, it's worth noting as well, this only really works if you understand key price action rules and you understand where probability lies. Mostly we'll use a reasonable amount of indicators for that and other aspects like trends, which is basically what I'm doing while I'm reading this. I mean, I can't sort of fit in one video 10 years of study or anything like that. But I can demonstrate, more or less what's possible. Okay, and you can see every single video I'm filming, you're ending up in gains. Every single time. It doesn't matter what way the market goes, you just more or less have to adjust based on the asset you're trading at any time. And obviously I don't have the sentiment case here either. I don't know what the exact price movements were in 2015. I'm going to add again. Equity drawdown still above 0.2%. Still in profit. Okay, minuscule gain there. I can now hedge those former longs lightly instead of stopping out like most people would have. You get so many more opportunities as well if you're not stopping out. It's worth noting that. If the price falls at this point, I am only losing effectively on 1/2 of the total exposure. Now, price looks subdued, so probability-wise, you could say, well, it has dripped very lightly. But the minuscule gain I took there, it works towards closing the whole thing out as I did on a previous cycle. Okay, so you're really just trading the market wherever it goes. And it's just all about maths, really. It's about simple math. It's about understanding how the sizes you're taking need to correlate to your equity and the asset you're trading. Mix in with that some probability rules, key price action rules, things like that, and you'll find things get a lot easier. All right. So still picking up gains, very minuscule drawdown at this point. I'll take that long. Okay, I would rather just take both of them out here. So now I've only got a long in play, and I can add for DCA gains, and I can hedge short if I need to. I think I've just moved all this around somehow. Unfortunately, I don't know. I would have liked that long as well. I think I sort of panicked to click it. There we go, more gains. I'll hedge short. Oh, there we go, got it back. You've got to roll the center bit on the mouse. Add short again. Almost like an ultra immediate hedge, just in case we pop up. I can kill that for gains. And I can add again. And then anything higher, I can look to initiate damage control very early. In other words, I can start to protecting a bit earlier than normal because to fit it in this video, I have to trade. I wouldn't say aggressively, but slightly tighter. So earlier hedges, etc. Okay. Kill that. Price still fairly supported. Short again. And of course, your DCA gains and overall high hit rate are going to contribute a lot as well. Okay, so I'll now add again. So I'm just scattering out 1/5 of my max size, spreading it out as the market runs. I can now take a light aggressive hedge, add long much lower. It's just in case that happens. Also add a short. Okay, I can now wash that. Essentially just close it with the gains taken. I can add an early long there. Big push up. Now I've got the opportunity to add more because I washed earlier. So I sacrificed a bit more in terms of gains to begin with. However, I've now got the chance to add a bit heavier higher up. And because I only added 0.02, I can add a 0.01. So at this point, still positive equity drawdown. And I'm going to look to protect. I should think on a bigger pullback, probably under my short here. So I'm going to let the market run a bit so I can see where we end up. Okay, so still a bit subdued. There you go. Kill that. I can hedge long. Just in case. Now I'm playing it a bit too quickly, to be honest. Don't want to add another short unless you come to the highs. Add another hedge long there. Okay, so what I'm going to do is no, I'm not going to kill that yet. This price is still fairly high. I will just take that hedge long for minuscule gains and just speed things up a bit. Still not going to kill it yet. Could add another one. Looks like price is subdued and you may fall lower, potentially. Still somewhat support there though. There you go, boom. Kill that. I can actually just kill that as well. And now I'm only $39 down. I will add 2 of these. Should have made it 0.02 to begin with. And again, I'm half exposed now. The push is weak, so if I get the chance, I'm going to exit this. I'm going to lose 60 cents. I'm not going to add light short, to be honest, because I can start to wind this down. Okay, any real push lower, and I can still bear in mind that we're still uptrending over time. So really, I could kill that as well. And I'm still in net gains. You can see the overall swing takes you really from about here, 11.31, okay, $170 higher, and you're barely, and we're in positive equity drawdown anyway. So even though the market has swung 170 bucks, okay, 1700 pips, it's done nothing to damage me. It hasn't even come close. All right. And now I'm free to add at a better setup. Okay, so a larger fall there, add a tiny piece because it's not amazing. There's still not massive market strength. Really would have liked to close it for nothing. There you go. And the process begins again. You know, so you're starting from a position of gains every time, and it makes things just that bit easier. You know, you've got the cushion of profits being taken. Now, that is what a positive profit factor looks like. Okay, so if you're ever looking at the stats, perhaps on prop firms, things like that, a positive profit factor would typically end up like this, you know, where you're ending up with gains overall and a very high hit rate as well, I might add. Okay, so you can see again, I'm just continuing the process. We're dipping back on this longer move. Price is now seeing probably a harsher market sentiment swing, and the lows are just being continued. And at some point, this will probably swing much higher. But, you know, like I said, no matter what the swing, even if it just kept going beyond 1300, we would reduce early, we would hedge accordingly, and that would allow us to simply end up in gains overall every time. Okay, and I can just add there, out for gains. And I'll just begin the cycle again. So simple to understand, but the real thing you need to get with this is you've got to change your sizes and your approach based on your equity, your trading style, market sentiment at the time, the asset you're trading, your drawdown thresholds for the whole portfolio, the drawdown for your asset. There's a ton of aspects which make this possible, not least the high hit rate training we provide and how you're able to watch me take gains constantly. So another video, net gains, no matter where the market moves, I'm ready for it. Okay, if I'd gone in with the normal sizes like currency pairs, then it would have been harder. But I'm not doing that here. It doesn't matter how much equity you've got, by the way. Someone did ask, if it's 10,000 or 100,000, you're just scaling down, but it will help the more sort of equity you've got. A lot of our VIP members are typically high equity traders. You don't have to be, you can get prop accounts and etc. And you can do this on a lower scale. But the main thing is you need to get the skill. So like I said, if you want that, go underneath, okay? Make 2025 your year. See you in the next video.